Well, hello, hello. Welcome to Crypto Talk with Brianna and Scott. I'm Scott. This is Brianna. Brianna, how you doing today? And what you got cooking today?
Hi, Scott. I am great. Great to see you as always and be here. Hello, everyone. I'm good. A lot of positive momentum this week, not only in the crypto charts as we saw Bitcoin break through that 30,000. That was exciting. And yeah, just positive momentum in life in general. I can't complain. I'm doing
Good, good,
well.
good. What are you going to
How
be
are
talking
you?
about today? What are you going to be talking about today?
I am going to be talking about Elon Musk's plans for Twitter, positive for crypto. So we'll get into that. The state of Montana paving its way for crypto miners. I don't know if you saw that one, Scott, but
No. Ooh,
made me
yay.
think of you.
Cool.
And then if we get to it, top Google searches, number 1 through 10. Number one might surprise you. We'll see who it
Oh,
is.
wow.
What are
Cool.
you
Good
bringing to the
stuff.
table?
Good stuff. Yeah, let's see, I've got a little chart here. It's like, why do people buy crypto? 11 reasons. We're going to talk a little bit about staking Ethereum. Did people, after the Chappelle upgrade, now where people were able to withdraw their staked ETH, did they withdraw more or did they purchase more? We'll find out. I got a little article on mining, not anything to do with Montana, but just some interesting data I think on crypto mining. Yeah. So, do you know what a crypto shrimp is?
A crypto shrimp. That sounds like me in the market.
Yeah,
That would
me
be my
too.
guess.
Yeah,
That would be my guess. The opposite of a whale would be my guess, but
yeah.
I haven't
We're gonna
heard of
talk
it
about
before.
shrimps taking over,
Okay. Oh,
and I think that's about it. Yeah. So yeah,
cool.
fun stuff today. I don't think anything too heavy. We'll see, but yeah, it's funny. So before we got on air, Brad and I were just talking about general stuff, and I thought we could just sort of recap that what we're talking about, and remind me what we were. I know we were talking about in general. Oh, I know what it was. My window washer is into Bitcoin, and I told Brianna, I said he's probably in his late 60s, and he was into Bitcoin before there was Bitcoin, and I don't think he's technical. He just had a friend who was like, "Hey, this digital cash thing is kind of cool," and they were investing before Bitcoin, and then when Bitcoin came out, they started buying Bitcoin, and he's been in it ever since. And I didn't get a chance to talk to him like 5 minutes, and I know that much about him, but I was thinking I got to find out his story, and we should get him on because he that's kind of a really cool story, and he probably has some sub $100 Bitcoin, and he hasn't sold much of it. He's kept it a long time, so I'm really curious to see about that. But we were talking about how interesting it is. That you'll run into people, like that every once in a while that are talking about crypto. And didn't you tell us your story about your coffee shops? You're running into people talking about crypto,
Yeah.
right?
Yeah, so I've spent most of my days in the coffee shops these last few weeks as I'm writing my book. I'm almost done with that. And I usually have my earbuds in too, but when I have them out, often I'll catch a little something and I want to like listen in a little bit because it's usually either on I hear people talking about crypto of all ages. All ages are talking about crypto. And then I hear people talking about just the state of the world in general and the dollar. Seems like I hear both of those things just so much. And I just want to like make everybody stand up and have a conversation with each other just to say like, hey, these are actually very interconnected. They're not separate. I ran into my uncle as well, and I was speaking with him about, we started talking about cryptocurrency, and he was asking me, oh, didn't that tank? We're talking about it, and I'm just trying to bring light to the fact that this more than an investment. It's not just an investment, right? It's all interconnected with the financial system. And so it's just that bridge that needs to be gapped, in all these conversations that's what's missing that I'm seeing is just the understanding that crypto is not like, yes, it's a separate entity, but it's not just an investment. It's not a gambling ring. It's all very much involved with the financial traditional financial system, a new way forward through that. So very
Yeah.
interesting. But it's
Yeah.
definitely catching on, and
Well,
it's
and
it seems to be catching on quick.
yeah, and I think the environment we're in now is a few people are certainly coming over. I kind of look at it like this that they may or may not know anything really that much about Bitcoin or whatever, but they've heard it, and they may be one of the few people that are like, well, I don't know that much about it, but maybe I should give it a try. This banking thing, I'm not sure about my banks anymore, and economy's not so good, and yeah, maybe I should try it. So that's kind of cool. I do sort of have this general sense of that. I haven't really talked to anybody specifically, but I say that now whenever the topic comes up, and usually I haven't heard other people talking about Bitcoin, but if I'm just chatting with somebody, I'll bring it up, and they're usually curious, and I'll mention something to that effect that now is a good time to give it a shot because, well, what do you got to lose? And really, because I do think most people understand that Bitcoin's been around for a long time, and that because it's on all the major news, like on the ticker now, you've got Bitcoin and Ethereum, along with all the S&P and stuff. So most people know it's around, and that's good. That's a good thing. So it's just going to be interesting because we've lived now through this more than a year now of this bear market, right? And we've heard all the bad things, and of course, last year was just a terrible year for a lot of and I don't say these were crypto failures, but these were bank failures or entity failures that happened to be trading in crypto. But it did give, crypto a bad name. Well, now we're into the new year. Crypto's and Bitcoin, is back, is going up. And that's just really, I don't know what the word is, just it keeps our spirits high or higher. And we were also talking about, what our predictions might be. What do we think? What are we hearing from other people? And both of us, I think, settled in on that we don't think it's going to go down to its lows again. Bitcoin, let's just talk about that. And that my thought is that I don't know if we'll get up to 60. 60 is kind of my barometer where I'm like, okay, if it gets up to 60, I'm going to sell some. I'm going to take some profit because I've been down low. I've been dollar cost averaging, so it's like I'm gonna take a little profit, just a little bit. I'm gonna leave a lot in there in my Bitcoin. Not that I have a lot, but I'll leave a good chunk in there. But I don't know if it's gonna get there this year. I think it's gonna go sideways, a little bit, up and down, up and down. And then I was also mentioning before we started that I was also getting more and more into trading, and volatility is great for traders, and that's even in the bear market. If you're just trading, all you got to have is volatility. All you got to be able to do is look, how do you think it's going to go up? Place your bet, kind of. I almost do look at trading a little bit more like gambling, but it's, it's educated guesses, and I'm learning all these different chart patterns and different ways, to put in your I keep wanting to say bets because it's funny because some people do that. They'll just kind of throw out that word, but it does connotate gambling, which I don't think investing is gambling. Investing in crypto, I don't think is gambling. I don't at all. But put in my deposits. I don't know what to call it.
Yeah, yeah, your trades.
My trades, yeah, trades.
Yeah,
So,
yeah, there you go. Yeah, for some reason I have the number 42 coming into mind when we're talking about Bitcoin. Like that's just keeps kind of like I keep seeing 42. So I don't know what that
okay,
means. Well, that's my prediction, I guess, for
all
where
right,
I think it
cool.
might hit and remain. And then yeah, I think just to kind of finish that off, I think it's going to shift so much, and it's shifted the evolution of all of this so much over the last couple of years. There were people like you and I and many people before us who were like, hey guys, like the sky is falling, like sound the alarms, look at what's happening in traditional finance. But because it wasn't so visible to people who weren't really diving into it, there wasn't that connection, there wasn't the urgency. And I think that now, like you said, people are starting to be like, oh, like these banks are failing, they're starting to see the economy really being hurt and the effects of all of it, that's where we're seeing that kind of wake up. Oh, okay, yeah, that's right. It is. The urgency is there to kind of understand. And that's where I think we're kind of seeing that corner be turned. And just looking forward, it'll be interesting because even what we talk about will be different as more people are gaining the understanding of this. It won't be so much of the focus of like, hey guys, like, please look into this. Like, it's really important. This is really good stuff over here, because people will kind of recognize that over time. But just popped into my mind.
Well, and inflation too. I think we have more talking points now than we had in the past. Because we've always sort of had inflation, but at 2%, it wasn't that big a deal. But when it's 9%, you can start talking about inflation, and that, hey, there's another place that doesn't have any inflation, that eventually, there's only 21 million Bitcoin. It's deflationary. So we've got that, and now we got the banking kind of failures. Like, maybe it's not so safe to have your money in a bank, and the dollar and the economies and the global economies that aren't looking so good. And if you're not afraid, if you're not the kind of person to be afraid, and you just look at the crypto market as another asset, then it's now easier than ever to kind of just say, oh, well, if these things don't do that, or that's what I'm hearing, that they don't deflate, and that no one can control it, so no one can shut down, my crypto access, then why not give it a try? So I just think that there's a lot more talking points that we can have now, which is cool. And in what we're still sort of in this bear market, or it's not crazy times like it was, because I think when it was crazy times, you did have a lot of people coming in. They're like, oh my God, I need to get in on this, which was good and bad. I think it brought a lot of people that didn't really have a clue what was going on. And then when it went down, they got all pissed off, and, but I think it did bring a lot more people in. But the other thing too, for me, it's like, I don't know, Phil might have talked about this before, but it's like, I'm really liking this sort of calm before the storm. And I kind of got into, I guess, I don't consider myself as one of those FOMOs, but I think I got in just before, it was in its 60s, maybe 40 or something. And so I feel like the people that were FOMOing in, they didn't really know what was going on, and they got out, or they're, bad mouthing crypto. So I just think that I just want to be ready. It's like I'm kind of getting my trading game on so that I can take advantage of when things start really going up. So I'm paper trading now, and and I'm a real conservative trader anyway. So I'm going to start off with small amounts of money, and I think what people don't understand too, when I tell them that, that just doesn't equate. They think anybody that's in crypto is like speculative. They're huge risk takers. There must be these wild gamblers or whatever, and that's part of my message to people. It's like, no, this is my retirement. I'm in the slow game. And you can do that in crypto, especially with DeFi. I've just gone out and flat start calling them crypto savings banks or crypto savings accounts. I don't even mess with the word DeFi for people that don't have a clue or whatever. And I just say, I put my money into crypto savings accounts and I earn 20%. And that's like, whoa, what's that? And it's true. I'm just going to start calling it that now, because there are some complexities, but it's also not as complex as some people think. The only caveat, if anybody is listening to this and they're curious about it, is that with DeFi and in what I call these savings accounts, you just have to watch them, because one minute they're at 20%, the next minute they're at 5%. But for the most part, you don't lose your principal ever if you're in stable coins. Now, so I talked a couple weeks ago that I had gotten a lot of airdrop from the Arbitrum token. So I was looking on some of these liquidity pools, these savings accounts, and there was some Arbitrum paired with ETH, Arbitrum paired with USDC, and they were one of them. The Arbitrum ETH pair had 60% return, 60% yield, and the Arbitrum USDC had like 11%, which still isn't bad, but I was like, had to be reminded, because I'm like, why is that 60%? And I had to be reminded that when you're dealing with a token like Arbitrum that can go up and down, is very speculative, that you really have to watch out, because there's a thing called impermanent loss. Because so if the token actually starts to go up on its own, there's a good chance that it would be better off to just keep Arbitrum by itself and not put it into a liquidity pool paired with, let's say, USDC. Because if they have to maintain even, so if the Arbitrum token goes up, it has to sell some of them to keep the USDC up. So in the end run, if you're doing just stable coins, that's a pretty safe bet. And if you can get one for 20%, which in some cases you can, then they don't move. They kind of both sit there and you just earn yield. If you've got even ETH or Bitcoin or Arbitrum or any other token matched with a stable token, you have to watch out. Now, the cool thing is if you're earning 60%, even if I could earn more by holding the Arbitrum token, it still wouldn't match up to 60% that I'm getting in that yield. So there's a lot of complexity to it, but at that level, but at a basic level, if you just do stable coins on both sides of the liquidity pool and you're earning 20%, you just can't match that anywhere. And it's not, it's not that risky. Now, I was trying to explain to my dad the other day, though. I said, but it's not completely without risk. Because again, especially if you're going for 10%, and I'm saying, look, I can earn easily 10% in what I call these crypto savings accounts. But it's still not as safe as a bank earning 5 or 6% or in a money market account, because the government will back that up. So there's almost virtually no chance you can, really lose your money if it's below 200,000 or 250,000. But in crypto, even though I'm in stable coins, and I was trying to explain this, Brianna, and I think you'll understand this, but because it's complex and yet it's easy. It's like for most people, they think of stablecoin as backed by a dollar. So let's say Circle, for example, USDC. There's a dollar in cash somewhere in a bank or somewhere that's backing up every stablecoin USDC I have. So and it's actually minted, right? So if I buy a dollar of USDC, a dollar of the USDC is minted, right? If I sell or burn that stablecoin, then it burns it and I get my dollar back if I want to cash out to my dollar back, right? So it's just 1-to-1. And so I was like, if you just think of it that way, it's like having cash in a savings account earning 10%. And in reality, that's what it is, right? But the problem is that I can't say, but it's guaranteed. I can't say that stablecoin won't go down, which we found out during the banking crisis that USDC could go to 60 or 70 cents, right? It still doesn't quite make sense to me, because if there's a dollar backing it up, every dollar, there's no question about it. Why did it lose faith? Why were people on the exchanges not willing to pay a dollar, which dropped the price because of just supply and demand? Because the stablecoin is still traded on a market. And what it was is 3 billion of the assets that were supposed to be backing up USDC were in Silvergate Bank or Silicon Valley Bank. And so when it crashed and it shut the doors, immediately people thought, oh my gosh, 3 billion are not backed up. And so they panicked. And when people were trying to sell their stable coins, people were not willing to buy them for $1. And so it's just a market. And so the price of that stablecoin dropped. And that's the sort of freaky part that's hard to explain, even for me, to people that don't understand any of this. And I'm trying to explain that, to them, because I want to be as honest as possible. That, yeah, it is like I have cash sitting there in a savings account earning 10%, but it's not a bank. So there are things that go wrong. Now, will they? They could, but it would be very rare if it did, especially if it went to zero. If USDC goes to zero, I think there's a whole bunch of stuff going on like that will be worse than that. There'll be something in some black swan event or something that caused that to happen, or some banking crisis or something, because basically that won't happen, for the most part, because it's all backed up. And in fact, when Circle came out, literally within hours, they said, look, no, we had 3 billion that were in this bank, but we've got 50 billion over here in these other banks. So it's like, don't worry about it. And then it started to slow up and it started to go back to $1. And then, of course, when the government came in and said, yeah, everything is backed up, it went right back to $1. So I just find that really interesting. I don't know why I got in that tangent, but it just kind of kept going down that route. And it's like, that's really interesting. I find trying to explain DeFi in a way, because it is good. It is a very good place to put your money, but you can't ever have 100% certainty. And in reality, you really don't with banks either, but it's certainly more palatable for most people than that is. So I don't want to sell DeFi short, but because it is an area that you can, all you got to do is watch it once a week at least, just to kind of make sure where you're going, and the upside is huge. So,
and can you explain for, like, we know that the question for somebody who has never been in crypto or maybe just hasn't partaken in DeFi. So let's say that you're staking and something happens, such as what happened with USDC, where it lost its peg to the dollar, and you wanted to pull out your funds. What does that process entail?
So if you're in a liquidity pool and you've got, let's say, two different stable coins, and let's say one's USDC and one is DAI or something like that. What you do is you literally have to sell each one back for whatever coin you want. So let's say, so you would first you withdraw your liquidity and it goes back into your wallet, and it's still in USDC and DAI. And that's what a lot of times you can do is you just pull liquidity out. You're not selling it. You're just pulling it out of that mechanism or whatever, and you stop earning yield or whatever. That's sort of the simplest thing to do, so you don't lose anything. So let's say that you do that. Now in your wallet, you've got this USDC that's only worth 80 cents or whatever. You would just leave it there, like I did. Now I actually even left it in my liquidity pools, but you don't lose anything until you sell, right? It's the same concept we talk about all the time here, right? But let's say it didn't, and you needed that money for some emergency or whatever. You'd have to sell it, and it's possible that you couldn't get $1, so you'd have to take 80 cents on the dollar, and you'd have a loss, which is just weird. But that's what would happen, and this all happened.
Do happen very
rare.
Yeah,
because for USDC,
button, right? It's a couple clicks of a button that you can pull things out to where they need to go. There's no time that you're waiting. You're not like having to have anybody in the middle of those. Yeah,
that's a good point. You don't have to go wait in the line, at the teller down at at the bank or whatever. And that's the thing about this kind of stuff. And it really is worth always mentioning. It's like you never lose until you sell. And so I just don't know if I could say that enough, because I find so many people think that way. And actually, a lot of people in traditional finance think that way. It's like, oh boy, I've taken a bath this year. It's like, my portfolio is way down, or I've lost so much money. That's the one I really don't like to hear. And it's like, well, did you sell? Well, no, I haven't sold. Well, you didn't lose anything then, But people just think, and my dad actually explained this to me. My 86-year-old dad, who's, kind of losing, at a little bit, he could still explain to me, because I asked him, I said, why do so many traditional finance people think that way? And he's like, well, because it all comes down to earnings. It's like every year companies have to report earnings, and they have to then take a snapshot and tell the world, what their projections are. Are they earning money, or are they losing money, or whatever? And even if you've got long-term assets that you don't have to sell right now, you have to base them on what their value is today. And that's what you report. And then Wall Street, makes their determination on, oh, is that a good stock or a bad stock? Is it going up or down depending on earnings? So that does kind of make sense. It's like, even though, in reality, you don't literally lose the money until you sell, most companies have to do evaluations at the end of the year. And I think that's why a lot of people think that way. But, I'm here to break that thought from people's heads. I just don't think it's healthy. And it also if you're in this bear market, I mean, if you go back and look at our shows through this whole bear market, most of the time we're still happy campers. We may talk about some regulations and some things here and there, but because we know that we believe in these assets, and even though they're underwater for the most part, right? We knew better. So there's just no reason to think that way. It's not healthy for your mind. It's not healthy for when you do transactions. If you just think, oh my God, I've lost money. One thing I'm learning the more I get into trading is that the best traders have no emotion at all attached to any of this. And in fact, the reason that you set your trades up, you set your entry, your stop loss, and your take profit all at once before you do anything, it takes all the emotion out, because you don't care if it goes up or down. You've already got the plan. You've put it in there. If it goes down, you're stopped out. If it goes up, you take your profit and move on to the next thing. And I thought that was the way everybody did it, like professional traders. And I find not. In fact, a lot of traders don't even do that. They don't always put in their stop losses and stuff. And I don't know what you call those, professional traders or whatever. And maybe professionals do, but yeah, it's just interesting.
Yeah, it's
Gosh,
so true. I was in so much trouble when I began really learning, like through the founders, because I had so much emotions tied. I was like, oh my gosh, like Stanny from Aave, like I'm just like, he is like, I just love his outlook and just his whole everything. I'm like, yes, I want to invest in Aave, which obviously has a great use. But then we have professional traders such as, I think it was Ben Cohen. I think it was Ben Cohen. If it wasn't Ben Cohen, it was Scott Milker, but I think it was Ben Cohen. And he was explaining how he doesn't invest in any altcoins that bleed against Ethereum. And he was saying, I've always wanted to invest in Aave, but it's always bleeding against Ethereum. And because of that reason, he has never invested in it. And ever since then, it and that's it. It's like, you got to remove that emotion. And that's one thing that we learned through our time through London Real is the market doesn't care about your emotion at all. So you have to remove it. That's not to say that, for myself, there are lines to draw on who I would not invest with.
Sure.
There's definitely that. But yeah, when you're placing all of those little things definitely come in. And I don't know, there's a reason why those technical guys are so just techie, and they're just on it without the extra. It's very all in the facts of what this would be, cause and effect, and yeah, all those things. So it's interesting. I think it's a
good mix. I hope that when the more I get into pure trading, I'll have a mix of it, but if I'm emotionally involved, which I am, there are projects that I love and people that I love in it. And, in Bitcoin, it's like I'm emotionally tied to Bitcoin in a way, but I'm not going to really trade Bitcoin. I might here and there, but I don't know, because I am emotionally involved sort of in Bitcoin, and I'm in it sort of for the long haul. And, and that's why it's almost like you sort of have these darlings out there. Like Polygon seems to be sort of a darling. It's on everybody's list, of an altcoin. If you had to pick one, that would be on a lot of people's lists, And I don't know if that's emotional or not, It's just because it does. Sometimes the charts don't look that good, for Polygon. And that's what you have to really be for trader. It's like, yeah, I think this is good. And what I'm learning in trading, the first thing you do is you look for an opportunity. You look at something you think could go up, right? Or I guess you could go short, but I don't even am dealing with that right now. It's like I'm just, something I think might go up. And I'm like, okay, so there is right off the bat some emotional tie to that. It's like there was something that caught my eye, something interesting enough for me to look. And then I go to the charts. And then that's where I've really got to take the emotion out and say, look, here's what the chart says. And again, it's not absolute science, because the charts aren't perfect all the time. But what I learned, what was really interesting is you need to think like what this guy, one of the guys I'm learning from, is called a probabilist. Nope. Probability trader. Let's just go with that. It's all based on odds, which is really interesting because if you think about it, it's kind of like in gambling. The casino knows that they have the edge, right? And it's a tiny little edge. It could be a 0.2 or 3 edge, but they know over time they're going to win. They're going to come out ahead. And so gamblers will come in and out, right? And take out millions of dollars and win millions of dollars with her, but they don't care because they know in the end, as long as people keep coming to the door, they're going to make money. And so he says that's how a trader should really operate too. That no matter what goes on, you look at the chart and you know that if you look at that chart, there's no way you're going to be 100%, that chart will be 100% right. There is an odds, there's a probability that you'll win and lose. And so, like a lot of times that's how much you actually enter in the trade, because that, you're going to lose 5 or 6 times maybe. And so the better traders, lose less often, but they lose. They always lose. And so the probabilist always puts a trade in that way on the odds. They never are 100% sure. They look at it and they say, this is my best guess. And if I set my trade up right, so I don't like put in, all my money, if I only put in 2%, let's say, of my total capability, then if I lose that, it's not going to take me out. And over long term, I'll win enough to be ahead at the end of the day. That's what good trading, I think, it is, and that's what I'm trying to live up to. But it's easy sort of to sit here and talk about it when I'm doing paper trades. But when I've got live money in on the deal, I'll come back in a month or so when I've got live money in there, and we'll see how that goes.
It does. It changes everything. And then you hear like Sandeep, who's the founder of Polygon, we were just talking about Polygon being a darling, go in and say with his conviction and his whole confidence and just say, we're going to be number 3, or, it's going to look like this: Bitcoin, Ethereum, Polygon. Like, this is everything we're doing. This is all the places that and you're like, okay, yeah, I'm all in. And then, that's at least for me. That's where I get stuck. So getting in, when you start to research, it's really easy to get very narrow-minded when you research. And then that's where looking at the technical analysis can be a huge asset, because you're looking at that and combining it with, I guess, the emotion that you automatically kind of attach to listening to the words of what these people are doing. And you get so, engulfed in that, and you look in these projects and you're like, yeah, like this is huge. And you just it's really hard balance to keep, when you're really looking into projects and seeing
I think it's
what
both,
the future is.
though. I think you can have both, though. It's like, if the way I would look at this is, if you really liked Polygon, you liked what Sandeep said, and you just really believe in them, they probably should just put that in your long-term investment. And that's the other thing too, is to be clear. It's like, you may never be a trader. I may never either. Once I get into it, I may decide this is just way too crazy and too much of a hassle, and then I become an investor. Because right now I'm an investor. I would say, yeah, I'm an investor, which that's delineates. I hold for the long term, and that could be anything from a year, over. And so my thought is I'll have both, so I may have a few projects that right now it's Bitcoin and Ethereum. I don't even mess with that. Even though I may trade those are my sort of darlings. I'm going to, keep those for the long term. Polygon may be one of those too. Then there are ones, that you just trade. You're just looking up there to trade it. And the more volatility, the better, Mm-hmm. And so we'll see how that pans out. I'll come back and, hopefully in a month or so, and kind of report that because right now I'm at the very beginning stages. And you know what's interesting about this? I don't know, from my perspective, I usually pick things up pretty quick, but trading has got a lot of depth to it, because like, I thought I was like a wizard, like, oh, I understand, support and resistance lines, or a trend line here or there. And that's just like the very, very teeny, very beginning of true technical analysis. I'm just now getting into some crazy Elliott wave theory stuff that still just blows my mind. It's like, wow. And so there's a lot to it. And then, most people don't want to even deal with that. But you want to be an investor. And that's what's great about all of this stuff. And I was never a finance person. We've talked about that before. Neither one of us were, until we got into crypto. And then we got, wow, this finance stuff is kind of cool when it's not the old, boring, stodgy stuff, right?
Right.
And I'm willing to put up with stuff now, in learning these charts and stuff that I never would have done, years ago. So, and it's just my motivation, because it's fun. Crypto is much more fun to trade a crypto coin than a stock. I don't know.
Agreed.
Well, we haven't talked about any articles yet, I don't think.
Yeah, should
We've been rambling. We've been rambling all day. All right, let me see. Let me get your screen on and see what you got going. All right.
Okay, we'll start. Okay, Twitter to launch crypto and stock trading in partnership with eToro.
I saw this.
So Twitter is reportedly set to introduce a new feature that will allow users at the platform to trade cryptocurrency and stocks. The new feature is being launched in partnership with fintech firm eToro. Twitter users will be able to browse the market charts for a wider variety of financial instruments and purchase or sell crypto and other assets through eToro. And this will expand on Twitter's cash tags. I don't know. Have you heard of cash tags before, Scott?
I think it's new. That's new. Cash tags.
So I know I've heard cash tags, but I didn't quite know. And I did define it, and I'll get to that here in a minute. So the cash tags feature that currently allow users to view real-time trading data from TradingView. So that can be accessed.
Really?
It's going to be accessed via a tab, an eToro tab, which will take the users to the eToro's trading platform, which I didn't even know. I've heard like eToro. I've never looked into that either, but I guess it was founded in 2007, introduced crypto trading features in the crypto wallet in 2019. So that's kind of a new, I mean, it's just a company I haven't really looked into.
Yeah, when I read this, I
Hashtag.
thought oh yeah, talk about that. That's what I was really interested in. I thought, how cool is that cash tag thing? Sounds like here, like it's been available. I didn't think you could do that until now.
Yeah. So, okay. So hashtag searches have grown into millions as the states. On the other hand, Musk, in a recent interview, said that he wants Twitter to become the biggest financial institution in the world,
Yeah.
which is it's pretty exciting. That's pretty exciting. I think that Twitter is going to just take on a whole nother. It's going to be its own thing. But a cash tag, to define it, it's a unique individual identifier for individuals and businesses using Cash App. And choosing a cash tag automatically creates a shareable URL where friends, family, and customers can make payments to you privately and securely.
Oh, wait a minute. This is something different. What I explain this to me. What I thought they were talking about is you put a cash tag in there, you click on it, and it opens up a view of the ticker symbol or something like that.
Okay, so a cash tag is separate from, so basically a cash tag would be like, okay, like I'm Brianna and here's my cash tag identifier, whatever the name might be. Maybe it's a QR code, I'm not sure. And then I can share that with family and friends. I've seen this recently. You share it with family and friends and be like, hey, you want to like pay me some money or however.
Oh.
But that will be available. You'll be able to, I believe, this will be integrated into Twitter. Or if it's not, I think it's integrated into Twitter already. You can post those on Twitter, but I think what will be integrated is then the crypto option, if I'm understanding that correctly, which will be on eToro, a separate tab, a tab on Twitter that you click on eToro, it takes you to the trading platform, and then you'll be able to trade and send crypto that way.
Yeah.
That's my understanding.
Okay. Yeah, that's cool. I
So
think it's
pretty
cool. I think that what he's doing with Twitter's good. I think there's still some haters out there, but why not? Why not take Twitter and make it better and better and more opportunities to use it?
Totally. Yeah, people get really stuck on what Twitter was, and I get that. I'm kind of that way in a lot of things, but when you have somebody such as Elon Musk who promotes crypto and now owns Twitter, like that's huge in allowing this to be able to have an avenue to thrive where we know what regulators are doing to a lot of the exchanges and so forth. So I think I agree. I think it's a good thing as well.
What do you think about him putting the Shibu dog on Twitter?
Okay, that was like it always blows my mind. It's always really interesting. You know that people take advantage of that pump and then people lose money in those pumps and they question why. Because he's always doing little things that pumping it. To me, it was kind of like a taunting thing, I think, to
Yes,
everybody.
that's how I thought it.
And I honestly, right now, I guess maybe I'm being a little immature about it, but I support that.
I do. Well, I think that's a good way to put it. I guess I feel the same way. It's like I kind of felt like it was oh, that damn Elon again. There he goes, just messing with us. It's just like because he can. It's like, and there's a part of me that's like, what an asshole. And then there's a part of me that's like, hey, if I was the richest guy in the world, why not? It's like I'm not really doing any harm. The only harm I guess I can see with it is the pumping thing, and people do lose money. People make money, I suppose, but I still am baffled by these meme coins and the fact that Elon still does this when he knows that it's going to raise the price of this. I don't know what he thinks, because is he doing it just for the fun of it? Does he know? Does he care that the coin gets pumped up or not because of him. I don't know. I don't like the inherent idea of the meme coin because it's like it has no value, has no utility. And as a serious crypto person, I'm like that. I'm not. I don't know. I don't like that on one hand, but I have to agree with you. There's a little immature part of me that's like, that's kind of funny. I don't know. I don't know what to
Yeah,
think
well,
of
I think when I look at the taunting part, I see it as him taunting, like, hey, like this is the power that one individual can create, and it's I don't think it's for like taunting the people. I mean, the people who are gonna like take advantage of those pumps, if you don't know you're risking, whatever, like that just kind of is a reflection of where you are in yourself as an investor. But for the people on the regulation side, the people who are just anti-crypto, like all these people that are hating on Twitter for being pro-crypto, when it comes to a lot of the people like in the government, to me, that's who I feel like he's taunting. That's like my reflect. That's like what I see. Like he's just gonna like, look, like this is my platform. I'm gonna do what I want. Like you guys don't have a like, not you don't have a say, because he does keep people with his voting and all that stuff in the say, but it's just to show, I think, the government, I guess, and the regulators that he holds power, I guess.
Yeah. Well, I like that. Yeah.
But it's hard to say. I don't know. It'd be nice if someone would ask him. We could get an answer as to why he
All
does
right.
what he does. But
All right. Let's see if you'll come on our show.
right, yeah. He's always on YouTube. He's always talking on YouTube. It's interesting.
Yeah. All right. Why don't you do another article, and then I'll
Okay.
do one or two.
Let's okay, do we want to go to the Montana miners, or do we want to
Yeah.
go over the Okay, let's
Yeah,
go to Montana.
I want to see what's up with Montana.
Okay.
I may have to go pay him a visit.
Montana, there's Scott there, because Scott is the Montana.
There I am, holding my
Montana
flag.
resident. Montana is my absolute favorite state, and I will end up there one day. You'll never find me. I'll be in an A-frame in the woods. But
That's right.
yeah, this is actually good news. So the bill seeking to enshrine crypto miners' right to the United States state of Montana successfully passed the third reading in the state's House of Representatives. Now the only thing required to become law is the governor's signature, which is looking promising because the governor belongs to the Republican Party and is a sponsor of the bill. So this is looking good. And what this bill states is that the legislation aims to establish a digital asset mining right and forbid any discriminatory electricity rates charged to cryptocurrency miners. Additionally, it seeks to safeguard mining operations that take place at home and remove the authority of local governments to utilize zoning laws which impede crypto mining activities. The bill also bars any extra taxes on using crypto as a means of payment, and it categorizes digital assets comprising cryptocurrencies, stablecoins, and NFTs as personal property. I thought that was really good. And then lastly, Section 3 outlines 3 specific areas limiting the power of the local authorities, including a restriction on imposing different requirements on mining centers from those on data centers. Additionally, authorities cannot prevent crypto mining in industrial areas and private homes. Maybe I said that already. So, yeah, good news.
That's interesting. I didn't see this about Montana, although it might have been in the article. I think it was Arkansas. There was another state that passed a bill that would treat crypto mining just like data centers. And that's kind of what it says in here too, but there's more. It sounds like there's a lot more in here. But this is all good news. But when I read that about it, I think it was Arkansas, I thought, oh, that's cool. It's like, why shouldn't they? It's like they're data centers. People talk about, Bitcoin is really just data centers, that mine it. It's not really mined in people's houses anymore. I mean, I suppose it is, but not really. Yeah, well, that's cool. Yay.
It's good to see, because we also, on the other hand, have there are some states, I think it was North Carolina I just saw, where, and I know it's happened in New York City or in New York, different places where they're really cracking down on mining. So it's good to see
Yeah.
this like really being solidified in, I guess, the rural states. Arkansas, Montana, Texas is
Yeah.
big.
Yep.
So
Texas is big. Yep. The West, we're going to control it. We might as well. We're gonna be we're gonna control it. Which I don't know. Doesn't sound very decentralized, but I'm just joking. All right.
all
Cool.
right, let's
All
see.
right.
Let's
I'm gonna
move over
pop
to what you
over. All right. So here's one of my favorite crypto newsletters, Milk Road, which is a play on Silk Road, obviously. Um, Now the first part here is just about the numbers, the CPI numbers. So I just thought we would talk briefly about that. So that was kind of good news. Basically, inflation rose only 0.1%. CPI is down 5%, the lowest since May of 21. So kind of good news. We'll see what happens. I think it's interesting because crypto went up and stocks went down, as you can see here. And then I don't know. This is funny. This little I don't know what this little penis head thing is here. This
I saw
guy.
the tip. I was like, what is that?
Yeah, I don't know, but it's funny. It's like, come on, do something. And I don't know. He's pointing to Nasdaq or whatever. I don't know. I would have Bitcoin like higher. So I was like, okay, it's kind of funny, but I don't get it. All right, moving on. Um, Here's about the shrimps. The shrimps are taking over. Bitcoin shrimps accumulated 35,000 Bitcoin in the last 30 days. So yeah, the shrimps are all getting in, and that's anybody that holds less than one Bitcoin is a shrimp in your
Okay.
wallet. So yeah, so we're all shrimps, a lot of us. But yeah, a lot of so I think that's good. That's retail investors just saying, hey, let me give it a try. I think there's lots of metrics out there about the whales and about where their Bitcoin is held, whether it's on chain or off chain or blah blah blah, and it's like sometimes that just makes my head spin. But when I saw this, I'm like, okay, I understand that, and that makes sense.
So question, Scott,
Yeah,
do you go from a shrimp directly to a whale if you own above one Bitcoin, or is there a middle
it's
stage that you
funny. I
have?
think this is a joke here, but it says that there are whales, fish, crabs, shrimps, and it says
Okay.
that's right. We're all named after the Long John Silver's menu. Um, I think there probably are fish and crabs. There's probably a delineation in there, which I don't know. I don't know. I could be wrong, but I'm sure somebody has laid that out. All right, let's see. Let's move on. Let's see. What was this? Okay, so this was a little bit about miners. Something in here I found interesting. Um, this is what it was. I don't know if you've heard a lot, but in the bear market, Bitcoin miners, it was a rough go for them because they have so much equipment cost and energy cost, and so if they have to mine enough Bitcoin to stay profitable, and they have to sell their Bitcoin just to keep their businesses running. So they're constantly earning Bitcoin and then selling it just to pay the power bill, right? And so this was interesting because, and I'm not sure where they got this number, but it says there's going to be a lot of miners that drop out. Because also Bitcoin is getting harder I was going to say every year, but I think it's like every epoch, I guess they call these. This is the time where how it takes to do block transitions. So it's a measurement of time, and I don't know if it's what that is. It equates to, but basically, it gets harder and harder to mine Bitcoin because the complexity of the puzzles goes up. So you've got to have more powerful and more powerful machines to computate and win the prize of being able to validate or mine that transaction. And that's the only way they earn Bitcoin. So somebody came out and said that around 48,000, when Bitcoin hits around 48,000, that's going to be this sort of break-even point for them, which I find really interesting. So you've got, real estate costs, equipment costs, energy costs, or whatever, and all of that, they can kind of break even when Bitcoin's 48,000. So they were losing a lot of money throughout these last years when Bitcoin was really low. So this is kind of interesting. I don't know a lot about. I've never mined Bitcoin. I don't know a lot about it, but it, it is sort of a barometer of the industry a little bit. You know, you need a lot of miners and you want a lot of miners in there. But if there's too many miners, then they're all competing for this finite resource. So I think there's this equilibrium, right, where you can't have too many miners because it's not profitable enough for them. So at 48,000, I think we'll hit that sweet spot. Says this might surprise regular readers, but it's talking about the Bitcoin difficulty. You know, it keeps rising. So I don't know if this has it, but there was this article or another article I was reading. I guess not this one. It was talking about they just came out with a whole new line of mining rigs, as they call them, right? Which are just CPUs or intense GPUs that are all packed into just one card, right? And so if you've ever seen pictures of these mining operations, right, they're just rows and rows of stacks of computer chips, basically. And China right now, I think, is still like the biggest producer of these chips that go on these mining rigs, which I always find interesting. Even when they were outlawed, Bitcoin mining, they were the biggest producer of these, Bitcoin mining chips. But anyways, I wish I had a picture of it because it's just interesting to see, because now these things are they're like supercomputers on a card, basically. And it's probably the most tangible thing that we can see, that of just this massive computer power back in the days in the 50s when we had computers that filled a room. One computer that could do less than our phone would fill a room, and now our phones are these marvelous, powerful computers, and they have these massive computer systems that run all the AI and supercomputers that run all these technical calculations in these big huge labs. But what's interesting to me is that mining is now they're packing so much power into these mining rigs. I don't know. It just seemed to used to be you only heard about these super computers in these fancy labs, but now crypto mining is pushing this technology forward. So it's a good thing.
I was trying to pull up an image here, but it's going really slow.
Crypto. There are some things like this that I think people don't realize, that it's pushing the technology forward in a good way. It's allowing high-powered computers to be created on these little cards that do so many calculations, and that's going to merge into AI, because you need a lot of that computing power to run AI too. So that's why I think crypto and AI are going to merge even more and more.
Okay, so it's moving from the need of having the big, like all those wired up rigs, like. Are you saying it's moving from that to just the chip?
No, I guess I didn't explain that right. No, it still looks like I'm just saying that the chips they're more powerful, and so you can, on one card, or like you see those rows and rows of the routers and servers, you still have to have the chips on a card that sits in there. It's just that they're packing so much more computation power onto them. So now, and there was something in, I can't remember, but basically what used to take 5 big computers or whatever to crunch these, now it can be one. All that power of 5 now is on one computer, so they can just, have less room, or, I don't know if, I think they're also using less heat. They're just getting, the technology is getting better and better. So this one, let's just talk about this real quick. This Ethereum. So, this was the second stage of the big merge. Ethereum network going through its changes, and it was called Shapella. I think this one was called Shapella. The main thing about this new upgrade to Ethereum network was that you could withdraw the ETH that you had staked, which I find interesting. I've not gotten a good answer on this, but even before Ethereum moved over to proof of stake, they were planning for this, and so people would put their 32 ETH, and they were running the proof of stake network along with the proof of work network for years before it turned over last year. And so people were staking their Ethereum, for a couple of years now, maybe 2-3 years now. They were able to put your 32 ETH in there, become a validator, and it was on the Beacon chain, which was running simultaneous to Ethereum chain, just to make sure they were testing it, right? But when they put this implementation in there, they never had a way to get the ETH out, which I thought was really weird. It's like, it just didn't make sense to me. And maybe I don't quite understand it, but I heard some people saying, it's like, yeah, that was funny. It's like, you could stake your ETH, but there was no mechanism to get it out. And there may have been reasons. Obviously, there probably were reasons for that, but I just thought that was silly. And it took up until this very time, yesterday, when now there's a mechanism where anybody that had staked can now withdraw that. And they can't do it all at once. It's a timed fashion so that the earliest stakers had the option to withdraw some portion of their ETH. So you couldn't really have like a bank run, on this. So that was all prepared for. But people really didn't know how this was going to go, right? They thought, well, now what's going to happen? Are people just going to say, look, I've had my ETH, stored here for 3 years. I need to get it out. And were they going to take all that ETH out? And was that going to cause a sell pressure on ETH and make the price go down? Or would more people say, hey, now that I know I can get it out easy, I'm more willing now to stake? And so that was the big question. And so it says here, concerns over the mass withdrawals in the last 24 hours, roughly 94,800 Ethereum has been deposited into the network. So it looked like that turned out good. Instead of being a big sell pressure, it's actually sort of non-sell or buy. It's basically staking. It means they're holding it. And so let's see. I think there was a number in here. Oh no, there wasn't. Okay, let's see. So gross staking deposits hit 198.7 million, and then I thought in here it talked about withdrawals. Shoot. Well, all I know is that the big thing about this article is that a lot of people deposited. There were like $1 billion at least or more of withdrawals, but a lot of deposits also. So that's good.
Well, and what great timing too. If that would have been, if this would have happened, at an earlier, or like at a time where, say, like right now was how last year was during some of those like really deep, that could have been a different outcome. So that's good, because right now we have some momentum. So people are like, yeah, keep me in.
Well, yeah, that's good. And now ETH is back up over 2,000. I think it's been bumping up on. Well, no, I don't know if it bumped up close to 3,000, but definitely well entrenched into over the 2,000s, which is, I was looking at that. I was looking at a chart today of that. I was kind of mocking up a chart of Ethereum, and I went back, and I guess I'd forgot that Ethereum was like $4,000, which I don't know if this is something you think about. I think about it a lot because in DeFi, I'm using the Ethereum network a lot. So gas fees, I'm constantly complaining and bitching about, doing any DeFi on Ethereum. This is why I like Arbitrum and Polygon and these layer 2s, because it's so much cheaper. I mean, it's ridiculously. It's like 21 cents if I'm on like any layer 2, and at the minimum, it's at least $5 or $6 per transaction on Ethereum. I mean, it's crazy. And then a lot of times I literally can't do my transaction because it's like $15, $16, which is more than the transaction I was going to do, because when I'm on these when I'm doing airdrop farming, I'm only doing like $1 and $2 transactions, and gas is $15. So
yeah, I have some stable coin. I just have some random little assets in my MetaMask sitting there because I'm like, I'm not going to pay gas fees to switch this like 10. I'm like, I guess it'll just stay. So yeah, it's funny. I remember when Ethereum this last year was down in the triple digits, and I was like, man, this is probably, I remember how excited I was like buying at those like $900 ranges, because it's probably the last time, or maybe the last time, that it will ever go that low, ever. You never know.
I think so. I think you're right. And I guess I didn't finish out on my thought on there, because actually the gas prices didn't necessarily correlate with the price of ETH, but when you're doing when you're buying NFTs, I mean, that's the biggest thing. And I've started to buy a few NFTs, cheaper ones, but everything's priced in ETH. And so now it's like, and the crazy thing was when Ethereum was up on the 4,000s, that's when NFTs were going crazy. And now NFTs are so much cheaper, when ETH is so much, lower. But now it's going back up. And it's interesting because also there are like sometimes if you want to go to a conference, like a crypto conference, they charge you an ETH. And it's cheaper now. I don't know. It's just going to be interesting. It's like thinking in a currency other than dollars is just weird. And we're used to dollars not moving up and down. The only thing and we don't see it, but even though it's devaluing, it's debasing, it still feels the same. When you start dealing in the currency of ETH, it's why Bitcoin and ETH haven't become a medium of exchange. It's just too volatile, right? And it'll be interesting to see once ETH goes back up, above 4,000, 5,000, whatever. Will people do that again? Will they start charging in ETH? Because they didn't have to. I didn't know why people did that. They just thought, oh, that's a cool crypto thing, but it's kind of a pain in the ass. It's like, and so now, I don't know. I don't know if as many people are doing that. And I say people, but like institutions. I know, like, different projects or games. If you're a big gamer, a lot of times you'd have to buy tokens for the game in ETH. So I don't know. Interesting. So this last one here we'll do is this is what is important to crypto investors. Now, I don't think it's any surprise that the number one reason why people buy crypto is profit in the long term. But that's interesting, I guess, because that's Bitcoin for sure, right? And so 52% believe, if you look down at the chart, it's very important that when they invest in crypto that it has long-term profit. But what's second is other financial gain. Now that I had to go look up. Thank God they had this in here because I'm like, well, what does that mean? Other financial gain. And this is basically those who seek out opportunities in staking, yield farming, and lending, and then learn and earn programs. So that's kind of interesting that 44% of people that invest in crypto are interested in it earning a yield or being able to play games and earn yield. And then the third one is savings, which is interesting because that's how I look at my DeFi yield farms. So let's see what they say about savings, because they said that was for others. So savings, third most important reason they bought crypto as a form of savings, including a hedge against inflation or to preserve their capital. 35.4% said they're buying crypto savings was very important. So that's interesting. I don't know. What do you think about that? Where do you fall in here?
Yeah, that was funny because I guess if I was to be starting from where I was 2 years ago when I first reinvested, I would say I started with short-term, profit for short-term, not even really realize, I didn't know what the heck I was doing or what, it was just, that's what I was doing.
Look at how low that is. It's 34% on here, profit in the short term, which is kind of surprising because you and I have talked about this, that I think also most people come into crypto thinking, oh my gosh, I'm going to go, make $1 million in crypto. It's going to happen really fast. And I thought that the thinking was short term, right? That's kind of how you are. That's kind of how I got into it too. I quickly moved into this long term. I started to realize, I don't want to mess with Bitcoin. I want to keep that long term. And then I moved into my second most important thing was either other financial gains or savings, but typically like a savings account. And then like you're way down the list because a lot of people before short term were in it for the utility. So I guess, how do they describe that? I would say like an NFT maybe. Let's see, what do they say? Oh, did I miss it?
Or just the ease of being able, I guess, to send it like over, like for people who work. For people who work like in the United States, it's a great deal and it costs a.
Yeah, that's probably true. Utility offered by crypto was the most. Let's see, 3 to 4 buyers said that they would consider how crypto would be used. Oh, you cut out there for a minute, and I was talking over you. Sorry.
Oh, okay.
Um, so yeah, I think you're right. I think that people NFTs, NFT holders, NFT utility. However, NFT utility emerged as the top reason for buying in, whether crypto utility ranks below financial reasons. So I don't know. It's just kind of an interesting stat here. I think DAOs like gain stake in a venture DAO. That's down there below disruption. Then you've got the hardcore. Um, I don't know, maxis, that are
I'm just
in
here to
there.
disrupt. I'm here to disrupt the world.
I'm here to disrupt the world. Yeah, no, that is funny. I'm an angry white male, and I want to take Bitcoin to disrupt the world. Yeah, and then of course
Social
you got
good.
the and
Oh,
community.
sorry.
Isn't that interesting? That's the last two: social good and community.
Which social good for me was what made me see this for what it is. That was where my passion started. I didn't see
Yeah,
that until a little bit over a year ago, and that was what drives me, and that's what still, it's kind of a conversation that I have regularly. I feel like people will be like, I don't like crypto. For those type, they're like, I just don't like crypto. I don't like crypto. It's my least favorite thing. Why do you like investing in crypto? I'm like, do you know what it brings to the world? Like, do you not know?
yeah.
And they're like, oh, okay, well, it's not the best selling point, I gotta say. It's just
I
not,
mean, it's
but
a
it's
good one, but you're right. It's most people. Most people don't get it. They totally don't connect crypto with social good, but that means they don't understand it. I read something this week. I wish I'd have put it in here. In India, they have okay. I've heard about this in Africa, where they basically use their phones and they have an economy on their phone. It's not in a bank. It basically they can send value in a text message. So if you want to buy something at a store, you have like these credits that are connected to text messages, and then you can just text that store 5 credits or whatever, and it's sort of this currency that just was created. I don't know. Have you heard about that in Africa?
I haven't, no.
Oh, that's been around a long time. Once mobile phones became really ubiquitous in Africa, it's like people had mobile phones in Africa in the villages and stuff before they had any other conveniences. They were able to create this economy because they didn't have banks, and so they were able to create their own sort of banking system. Now, it didn't do everything, but it allowed a medium of exchange, which is cool because when you learn about money and how it was created, millennia ago, that's the way it was. It was just, and again, it makes sense. Money or currency is just anything that we all agree on that is value. We have to agree, but once it's agreed upon, anything can become money. Anything. So they did this in Africa, but it was kind of a small term, and again, there was no blockchain or anything like that involved in it. India now, though, has created something similar, but on a bigger scale that allows you to use your phone and you can just exchange this currency and it's not on the blockchain. And I thought it was interesting because India being probably one of the largest up and coming economies, and everybody's like, India's where all the action is going to take place in crypto and blockchain and finance, that they've created their own, and it's not blockchain. And it'll be interesting to see if it takes hold somehow. You've got the CBDC thing, which again, those may or may not even be on blockchain, or if it could be a private blockchain. So it just made me start thinking about there are competitors to, let's say, a Bitcoin like currency that would run on an open, decentralized blockchain. And even though it makes sense to me that a Bitcoin network, decentralized blockchain, would be the way to go in the future, it may not be. I don't know how the CBDCs are going to roll out. I also did hear that there was an interesting story that CBDCs and Bitcoin, blockchain, crypto could coexist, and that might be the most logical thing to happen. There will still be a digital CBDC that the governments will have, but we'll still have our Bitcoin and our crypto. So I think I used to think that it would probably be all or nothing, that if there were going to be CBDCs, there'd be no option for, let's say, Bitcoin or crypto. I think it's more likely now that no matter what happens, we're still going to have a crypto, a Bitcoin, and the place for us to do decentralized finance. And they may have a CBDC where we're all going to have to just, if we want to live in the United States and bank and do our normal stuff, we'll have to go on to the CBDC. The question is, how much control will they have over it? And is there any say that we will have in how much control they have over it? So of all the talk about CBDCs, I think it's probably likely that we will have one, but it won't prohibit us from using Bitcoin and what we're doing in crypto. But the question is, how controlling, how draconian will it be? You know,
and how far could that actually go? You know, and I agree with you. And do you remember Brandon, who did I know you remember Brandon, but do you remember when Brandon did his CBDC really great presentation, and the final, I think it was like his final slide was saying that, like, with Bitcoin being kind of the backing, that's a picture that I've been seeing more. Like, it was like this great light ending to, you know, what CBDCs may roll out. And I think what he was saying is that Bitcoin was like, could be what would be backing the financial, like the whole structure, like way down the line, if I'm seeing that right. I was pretty shut off to it at the time because I was in a very like Debbie Downer phase, but he, now I'm seeing that picture painted in certain articles, just those opinions in Bitcoin Magazine. I just read one yesterday that was painting that picture as well, like that we're going to go through all this turbulence, the CBDCs, but like the friction in between the countries, the US dollar not being the world's reserve currency, but like the other countries not being able to, you know, be able to create their own. And then ultimately leading into this whole picture of like Bitcoin being the outcome of.
So are you saying that basically the Bitcoin network would be like the rails that the CBDC would run on top of?
I don't know. We need to get Brandon back on here. I'm really curious to see his CBDC take again.
Well, I mean, that's an option.
Myself. Yeah. I mean, and I'm going to be diving too. We should do that, like a collaboration. Get him back up here. I want to dive in myself and come up with some stuff and maybe kind of run through that again now, a few months later, because he was with us. Yeah, he came on our show.
It's been a while.
Yeah,
it's been a while.
Sorry.
Yeah, well, wow. Yeah. I think so. I think that, and I have my view of what a CBDC is, how it might get rolled out. You know, globally has kind of changed too. I don't really know. Like I said, I think my current working theory is that they'd be completely separate. I used to think it would be all or nothing. Like if there was a CBDC, it would take over, and we couldn't use our Bitcoin network and, you know, all that kind of stuff. Or there might be some sort of hybrid that would, you know, bastardize Bitcoin or, you know, and make it weird. But maybe the other option is that, and I actually, this was what I've always hoped for. And, you know, we'll see if in the simplest terms, you've got what I call the Bitcoin network, right? Because you've got Ethereum blockchain, you've got different kinds of blockchains, but the Bitcoin one is the first one, and it's the most secure, and it uses mining and that whole thing. And that blockchain rail, right? So basically that's just a layer one, and anything can run on top of that, including a CBDC or anything, right? And so I was thinking that, especially between the countries, it works great now. So you just lay like a country, like, I don't know how it would work, because each country is going to want to hold their own CBDC. I don't see that ever happening in our lifetime, where there's one ubiquitous currency for the whole world. So, you know, they still have to interoperate somehow, and maybe Bitcoin is a great way to do that. I don't know. I sort of see them as like each country's going to have their own. It's going to be just siloed, just like our currencies are now. It's just the only difference is there really won't be much difference, because almost everything's digital anyways. It just means that there will be some form of, we really won't be able to get cash anymore. It's all going to be in this digital thing, whatever it's called. And you'll still have separate countries. They'll have their own separate one, and they'll interact better. They'll have to figure that out. I think you'll be able to send money easier digitally from one country to the next country. and hopefully, maybe Bitcoin and all crypto just whole separate thing. I don't know. Instead of converting our fiat into crypto, we'd have to convert our digital currency, our governmental digital dollar, into crypto. And now that I think about that, that may be the bottleneck. That may be where the government could do some damage. So, right? Because it just dawned on me that, right now there's this whole intermediary of the banks that we have access to and that the government sort of access to, but indirectly. If we're now all dealing with the Fed directly and everything is there, they could shut down our access to get to buy crypto much easier than they can now.
Oh yeah, and that's the thing about CBDCs is the potential for the things that they could do for control, whether that would happen or not. It's just the potential of having that set up for even the future. If you have that set up now, may not happen now, but in the future you get the wrong people and the wrong power with that in their hands, it can get really bad. But I don't know. I currently don't know if I've been hearing a lot of negative talk on Bitcoin. I know I will bring that up sometimes, and when I do, I'm referring it for just Bitcoin in the past, but Bitcoin's taken on its own life of its own in its own way, where, and maybe just the focus right now is so on centralized exchanges. It's on why is it not coming to me? Oh, stable coins. Those regulations. I know that DeFi is supposedly is up and coming. There was a bill that was just put out, or some type of, not a bill, but a paper, can't think of the word. But when these specific, I'm going to call it a bill, but when these come out, it's a precursor to when they're going to start putting further regulation into, and that was on DeFi. So I know Coin Bureau said before that's going to be up and coming, but Bitcoin itself, I feel like, is being more integrated just within everybody. Everything is starting to take in Bitcoin. The other part of cryptocurrency seems to be kind of its own thing, that it has more regulation, but Bitcoin, I don't know.
Well, you're right. I mean, if you look at all the negative criticism about crypto and, Elizabeth Warren and all the haters, they don't talk about Bitcoin. It's like Bitcoin is kind of doing its own thing and people kind of leave it alone. They're worried about all the intricacies of all the other stuff, right? And DeFi being a part of it. Yeah, and I've seen some things that they're going to start really looking into DeFi. And it's very possible, and this is why, if you're yield farming today, there may be no yield farming, or it may look completely different tomorrow because they may put a lot of limitations on it. I think that there's always, going to be some new innovations and a way to do some kind of form of yield farming. But what it looks like today could totally be different. Speaking of that, I know we're going over time here, but I just saw this since we're talking about this. Here's an article, the Anti-Crypto Association Hall of Fame. Warren Buffett, number one. He's the number one. He's called it rat poison. He says Bitcoin is a gambling token. Number two, Charlie Munger, his sidekick. He thinks it's ridiculous. Number three, Jim Cramer on Mad Money,
gosh.
just going crazy
He's
yelling about Bitcoin. He's the worst, yeah. And then, of course, Elizabeth Warren. We couldn't have a Crypto's hater list without Elizabeth Warren. And I love this meme. Elizabeth Warren, all these inflation, bank runs, everything. She's saving us from, all that. No. Jamie Dimon. So I heard, who did I hear? I think it was Raul Paul, or no, it was somebody on Real Vision, though, that said that, or no, you know what it was? It was, oh gosh, who's that guy? I was going to say not Pomp, Scaramucci, Anthony Scaramucci. I heard him on a podcast, and he was saying that Jamie Dimon is just too smart to really hate Bitcoin and crypto. That if you would get him behind closed doors, he would see the value in Bitcoin. But he's basically tied himself to the regulators and to the government, and will never publicly say that. So I thought that was interesting because, Jamie Dimon's a pretty much a hater. But I don't know. Scaramucci thinks that that's just what he says in public. So anyways, I thought that was funny. And I don't know what this meme means. What does this mean? Where did all your money go? and he's like, FTX, Terra Luna. I mean, I don't know. It's like is that picturing us as like stupid? Like we don't really know. Like I don't know what that's showing. Oh, I see the tax man. Oh, the tax man is asking that. Yeah, now that makes sense. All of a sudden, it just hit me. Okay, the tax man, and we're like, I don't know. Must have gone somewhere. That's funny. Yeah. All right. Well, let's get on the heck out of here. Hopefully we'll have a good weekend, and we'll be on to another Mighty Crypto Week next week.
Yes. Yeah. Altcoin season. Bring it on.
Altcoin season. It's coming, guys. I don't know. I'm getting excited. It might be here in a week, so we got to get ready. What are your altcoins? So next week, everybody have your favorite altcoin, and I want you guys to tell us what your favorite altcoin is. And Brianna, you're going to have to pick one. I'll pick one, and we'll talk about it next week. All right, everybody.
Sounds great. Thanks, everyone.
See ya. Bye.
See ya. Have a good